Cool. Well, I guess we'll just kick it off really quick. Thanks for hopping on, everyone. This is our first BTCS Rocket Pool community call. I know Nick had mentioned Ken will take over for kind of organizing the questions and discussion here, but I do want to thank everyone for hopping on and welcome you guys to the first one.
Yeah, well, thank you. And Benjamin, thank you very much for hosting it here on your Twitter handle here. This is awesome.
That's all, Charles.
Oh, perfect, perfect. Well, I wonder maybe if we can start off a little bit, maybe have both of you, Charles and Benjamin, if you can introduce yourselves and then tell the Rocket Pool community a little bit about what BTCS is and maybe a little bit about your origin story.
Sure, I guess I can start. So I'm, Charles, CEO of BTCS. My background, was an engineer for some time, then did investment banking for 10 years and took BTCS public back in 2014. So I've been in the crypto space since I think the June or July of 2013. So basically lived through pretty much every cycle, maybe missed, one of the really early ones. And it's been quite an adventure. We've taken BTCS from being the first Bitcoin miner to the first digital asset treasury strategy to the first, public company staker. I mean, it's all in the public markets, obviously. And so, where you find us today is where we run validator nodes, solo nodes. We run validator nodes for Rocket Pool. We're a block builder. We have a relay. I think we're the only public company in kind of the ETH space that's doing more than just a basic digital asset treasury strategy, right? We're putting all of our crypto to work. We're actually building, which I think is really important with the vast amounts of money flowing to public companies these days. I think hiring developers, building solutions, and making Ethereum better for the community is really important. So that's kind of the high level on me. I know I kind of jumped around a little bit there, and I'll leave it to Ben to give his background.
Yeah, I'm Ben. I am a developer here, the VP of engineering. So I handle our day-to-day like dev operations. We're live on ETH with the block builder and the relay and a bunch of validator operations we're doing. We're also live on BSC with a block builder as well. We do have a few other things that we do day to day, but they're not nearly as exciting or relevant to this this conversation. So
Yeah, and I for one, am very excited about today's call. I guess maybe a little bit of introductions, recognizing we've got members from both our communities joining this call. For those that don't know me, I'm Ken Smith. I'm one of the rocket scientists with Rocket Pool, and I have the privilege of hosting our kind of biweekly community calls. And today we're also joined by Langers. Langers, would you like to introduce yourself and provide a little bit of background on Rocket Pool?
Hello, everybody. Yeah, so I am Layers. I am the general manager of the Rocket Pool core team. So Rocket Pool is a liquid staking protocol. It's kind of unique in the sense that it has kind of like two sides to it. First of all is the liquid staking side where people can stake ETH and get our liquid staking token in return, and it's yield bearing, so they get the yield from that. We also have a node side, a node staking side as well. So people can stake on the node side and run validators. They provide currently an 8 ETH bond, and then the rest is supplied by liquid stakers. So yeah, it's fantastic to be here. I'm also very excited about this call. It's going to be a really good one.
So, Ben and Charles, maybe we can start a little bit more with the origin story, right? BTCS, I guess, started out initially in the mining industry, right? Probably first Bitcoin mining. I too started there, ran some miners out of my house, made them myself. But tell me a little bit more about the story and maybe the transition that BTSC has done. It seems like you've gone through a couple of phases. One of the phases, I suppose, is taking your operations into a publicly traded company, which is kind of unique in this space. And then two, a transition you did from Bitcoin mining or proof of work mining into proof of stake validating. You want to talk a little bit about those two large transitions?
Sure. There's actually a transition that predated that. So when the company was started in 2013, it was actually an e-commerce website where you could buy stuff with Bitcoin. So the company name was Bitcoin Shop. It kind of competed with Roger Ver's Bitcoin Store. He actually, tried to sell it to us, and at the about mid 2014, we decided that e-commerce was a really bad business to be in, and we wanted to move out. And we started looking for ways to generate revenue and shareholder value within the crypto community that wouldn't land you in jail, or with the police at your door. And that gets pretty thin pretty fast in the early days of crypto. And that's kind of how we landed on Bitcoin mining. It was highly revenue generating, obviously capital intensive, and so we pivoted around the end of 2014, and we did that for quite some time, until effectively Bitcoin. I think Bitcoin crashed from like 1,200 to like, I think it was around 225, which is kind of crazy when you think of the price now. But it was enough that the markets can stay irrational longer than you can stay solvent. And after a certain period of time, we had to shut our mining facility down, and that kind of made us come back to the drawing board and rethink what we were doing. And it was a pretty easy decision. I think this was around 2017. Is if we had just bought Bitcoin, or actually even.
Oh, excellent. Yeah, no, I didn't kind of realize that there was even a pivot before that. What were kind of some of the thoughts between so obviously you continued in the mining space throughout the multiple cycles of BTC, but it was fairly recently, I think, that you transitioned from the proof of work to the proof of stake. You want to talk a little bit about that?
I think Charles' mic might have cut off. But yeah, I'll kind of. Oh, are you here, Charles?
Can you hear me?
Yep.
Sorry about that. My screen came on. So we actually transitioned to Ethereum in 2021. So I mean, I guess it's relatively recent, but if you look at some of the other Ethereum digital asset treasury plays, not really. So we at the end of 2020, I think it was in December, Ethereum effectively forked with the Beacon chain, pre-merge. And that was too early for us to enter, just because we didn't feel like we could get an audit done. I mean, this was really new stuff for our auditor. And so we decided to do it in the beginning of 2021. So I think we were probably a month or so after, and we basically sold off our Bitcoin and went kind of pretty much all in on Ethereum and a couple other tokens, because we were running staking as a service platform that supported other tokens, other delegated proof of stake tokens as well. And but even at that point, we were 75% Ethereum, maybe 80, the better part of the last 5 years. And so the transition to Ethereum was primarily because you can't really do anything with Bitcoin. Like I love Bitcoin, but it doesn't do anything, right? It's not a good. You can't build on top of it. You can't generate real revenue holding it. You can just hope it goes up. And so when you look at Ethereum, you can basically tokenize real world assets and move them globally and create it's a whole economy and ecosystem that can fundamentally change the world. And we looked at that and said, well, this is a much bigger opportunity than just holding Bitcoin. I mean, obviously, my strategy has done very well with that plan. But we looked at it and kind of decided that there's a better way to do this, and that's when we made that pivot. And since then, it's been a slow evolution of, we started out using I think launch nodes to help us run the validator, still not using like a third party staker, and then we brought that in house, and we've slowly been building over, I'd say, the last 2+ years, building out our infrastructure and expertise around running validator nodes and block building.
Okay, so then where does the intersection with Rocket Pool come in? When did BTCS find Rocket Pool, and how do you integrate it into your business model?
I think that was about a year ago, maybe. We started looking at ways to generate additional yield, and we had looked at staking as a service. So we looked at, because we did that for delegated proof of stake blockchains historically, for a short stint. And when we looked at what Rocket Pool was doing, in that you could basically get liquid staked ETH by having others run the validators, and it became really interesting. And so we started researching how we could utilize the platform by running, by being a node operator. I think it probably took us 6 months of due diligence before we, finally really got in. We were running, a couple nodes, kind of the bare minimum, but had some RPL tokens. We evaluated a couple other providers as well. We were testing, for those familiar, Statter, which documentation was not as good. It was borderline unauditable. And so we really went with Rocket Pool because the documentation was great, the security was great, we were comfortable with being able to do it. We could get our auditors comfortable, which is a hard one if you're a public company. You got to trace down every penny, and they have procedures that are not blockchain based. So we were able to figure out a way to do that with Rocket Pool, and once we figured that out, we were able to scale up. So I don't know exactly when that was. It was definitely over a year ago, maybe longer.
And then which way did there's really two sides to Rocket Pool, right? There's the Rocket Pool, I suppose, if it's looking at a product that it produces a liquid staking token, rETH. And so a lot of individuals will invest or hold Rocket Pool by holding the rETH token, right? They want the liquidity, they want the LST part of it. Another side that people say participate in the Rocket Pool protocol is they actually run the node, right? They have the computer resources, they have the technical know-how, and they, for earning a commission for performing the node operating work, they earn a higher rate of return because they get a commission on the kind of liquid staking side. Versus holding the liquid staking token, you have kind of the liquidity, but you also pay a node commission, or you pay a commission for that kind of privilege of liquidity. Which side of the house did BTCS take? Did you take both, or did you just come in only on one side of the house?
So we're only on the call it the node side of the house. The way we look at it is we have, as you say, like, we have the technical expertise. We've been doing this for years. We were doing it on the solo side, and it just seemed like, when you looked at the math, if we can run nodes on a solo basis, obviously we do better than outsourcing that. But if we can run nodes for Rocket Pool, and you're providing the liquid staking token to someone who values the liquidity and wants a yield and is willing to pay a fee for that, and we can share in that fee by running the nodes, we can basically bump up our yield. And I think, and Ben, correct me if I'm wrong, I think it's around 35%. So it was kind of a no-brainer once we figured out how to do that within a public company, which was a very big effort to do. I mean, if you're doing it at home and you have the technical expertise, for us, you have to have the technical expertise, the accounting expertise, be able to run it through the due diligence process. And so, yeah, a simple question is we're 100% on the node side, not at all on the liquid stake, on the RPL side, on the token side.
Yeah, and I think one thing that is maybe unclear to the community is, like, even if we're comfortable accounting for something, our auditors might not be comfortable auditing it or verifying it. So we have to really fight against that our whole process. Like the whole time we're doing anything on Ethereum or crypto, we have to drag our auditors along to get their approval and kind of really stretch their muscles over there.
Yeah, I would be kind of curious to know more about this, because I think many of our communities are home stakers, or maybe just private wealth entities that are in here. And so I wonder if maybe Lingers, you might be able to comment a little bit more about what were some of the early conversations or communications between BTCS and Rocket Pool regarding kind of that due diligence or the background, because this is, I think, an excellent example of an institutional staker using Rocket Pool.
Yeah, that's a great question. So we spoke to BTCS quite a while ago. I can't remember. I'll have to scroll back through and see exactly when. But yeah, quite a while ago, when they were interested in coming on board as a node operator. And really, we just gave them some kind of support in doing that. We had a call with Charles and the team to kind of go over Rocket Pool a little bit. I think that was probably part of the due diligence in retrospect. But yeah, so no, we kind of gave them a little bit of support, but I think that they've pretty much done it themselves. As you can tell, they've got a fantastic team their side. So it was really just kind of like maybe pointing in different directions for documentation and that sort of thing. I think there wasn't really much that we needed to do. But yeah, no, it's a fantastic relationship, and it's really good that we're kind of like taking this forward and doing hopefully more together.
Yeah, without a doubt.
So
I wanted to jump in, if I may, Ken. I am Jasper, the Friendly Ghost, former co-host with Ken on these lovely community calls. And I happen to be free from medical school today, and very happy to be here because the BTS partnership has been astounding so far. You guys have thousands of ETH staked in Rocket Pool, and I think it's been wonderful. And on the topic of your ETH strategies in DeFi, I wanted to touch a little bit on one strategy you guys have been employing quite well, and that's the ETH you guys have been depositing in Aave to then borrow against to buy more ETH. I think this is like a really innovative method of utilizing the public markets and the on-chain markets as a form of arbitrage. And what I wanted to ask is, have you considered using a liquid staking token in place of raw ETH within Aave?
We have, and I think I don't know, there's some more complex accounting concerns around that, because I don't, correct me if I'm wrong, is it's either debasing or not debasing, and so I know it creates some additional kind of headache when you start to stick that as collateral from an accounting standpoint. So we've looked at it. We've looked at all sorts of other ways to increase yield. I think the way in which we're doing it was done to kind of minimize, to maximize yield while minimizing the headache involved. And you're right. I mean, I don't think everybody fully understands what we're doing with Aave, which is pretty remarkable. And we basically kind of put it in basic math. If we put up 100 million in collateral in ETH and borrow, and I'm just using round numbers, the actual numbers are different, and let's say borrow 30 million, so it's a very safe loan to value ratio. If we earn 2% on our collateral, we're making $2 million a year in ETH, plus we have the upside. And if we get that 30 million that we borrow and we pay 5%, we're 1.5 million in interest per year, and so we're netting $500,000 a year, and we've increased our exposure to ETH by an additional 30 million, or we're at 130%, and we did that without diluting our shareholders. Obviously, as the risk of the price of ETH drastically goes down, we could end up with liquidations or have to post more collateral. But because our loan to value is very low and we have access to the public markets, we're basically getting like a free cost of capital. I mean, it was surprising. I talked to like a traditional banker that were saying, "Hey, let me do a debt financing deal for you." And I told them, and I was actually mistaken. I'm like, "Well, I'm paying 3%." They were like, "What, a month?" I'm like, "No, a year." And it turns out, I just kind of had a brain fart and was wrong. We're actually earning at that point in time about 1% a year. So we're actually earning on our borrow, right? So it's like, well, I'm not paying you a banking fee. Why don't you pay me 1% to, put my money to work? Which is kind of a really unique way to be able to do it in the public markets, kind of crossing the, traditional financial tools, whether that's, convertible debt, at the market offerings of common stock and DeFi. And I mean, even MicroStrategy can't do that. All they're doing is buying Bitcoin and coming up with new novel, preferred stock and debt deals in the capital markets. And I think we're sitting here on the Ethereum side doing really exciting stuff with Rocket Pool in terms of how we increase our yield. We're doing it with even how we buy our crypto. We use CowSwap and Uniswap. In addition to OTC desks, how we deploy that using Aave, and we're continually looking at other things we can do within the space. So, it's pretty exciting times, and I think we're probably the only public company doing this. I think most of the other plays are just buying, hoarding, and farming it out to like Galaxy to stake and manage for them, or other larger players to manage it for them.
Yeah, maybe Charles, just to follow up on that, can you maybe walk us through how does it work as a public company? How do you raise the capital or the funds to acquire the ETH to use as the node operator collateral, and how do you generate a kind of a return to your shareholders on it? Can you maybe kind of walk us through it as if we were maybe potential investors in your stock?
Sure. So the real hard part's getting everything set up. So it took us a year to get through the SEC with what's called an S3, and we have an ATM agreement, it's an at-the-market agreement. And to kind of put that in plain English is, after finally getting this thing in place, it means we can sell, like the company can sell newly issued shares of common stock right into the market. So imagine you get on Robinhood and you want to, sell some stock of Microsoft in your account, and you hit sell at X price. I mean, it's a little different than that it's not online. I have to talk to the broker, which is great. We have a good relationship. So if the market's doing really well, we can just sell into the market. So the shares people may be buying in the market, instead of coming from another holder of shares that are selling them, it could be coming directly from the company. And we pay about I think it's a 3% commission for the shares we sell, which is kind of industry standard for an ATM. But it also allows us to be very strategic about when we sell. I mean, you could sit on the stock all day long and sell. There's kind of no limit. Or you can say, well, when the stock's up and we're at a good premium, or we like the valuation, we'll sell, and when it's not, we won't. And so, it's probably one of the lowest costs of capital you can get in the public markets. It's kind of unlimited permanent capital, which is really the holy grail of being able to raise money. We have right now a $2 billion shelf. Just because we have it doesn't mean we're going to use it. But being able to, capitalize on spikes in your stock and raise money and then deploy that quickly is really remarkable. And to kind of put it in example, I think our stock's been down quite severely, as are many of the Ethereum focused public companies in the last week or so. But prior to that, it was trading record volumes, $100 million a day. We had one $800 million a day, and there was literally a week where we were raising 10, 20, $30 million a day every day. And we were being very strategic about that. We were typically selling near the top of the market every day. If the stock would do poorly, we would pull back. And when it starts to go south, we completely get out of the market. And then we take those funds. The biggest issue is kind of turnaround on settlement. We usually get the funds within, the following day or 2 days, kind of depending on how things go. Immediately hit an OTC desk. We have multiple OTC desks. Buy Ethereum, deploy it on Aave, borrow against it, take the borrowed USDT, go jump on CowSwap or Uniswap, buy some more Ethereum, and then tee it up to stake it via either solo nodes or on Rocket Pool. I will say we're kind of anticipating the upgrade on Rocket Pool, so we're excited to see that, and I think the goal will be to scale up a little bit more when that happens, so we're not waiting in the queue and then exiting the queue to get back in the queue. If that makes sense.
Yeah, it totally does. And then maybe help expand a little bit about your kind of business decision or weights between how much of the ETH do you, let's say, borrow and lend on Aave versus how much of the ETH that your share revenue has generated do you deploy on Rocket Pool to earn an additional boosted yield with the node commission versus how much do you just stake and earn a solo commission on? Do you have a strategy or a formula as to where to deploy that capital, or is that made on kind of a case by case daily basis as you sell stock and acquire the capital?
Well, there are two things that kind of dictate that. I think one is, the queue. What's the current solo validator queue look like? What's the Rocket Pool queue look like? We're also looking at lots of other ways to kind of diversify how we generate yield. beyond what we're currently doing. With respect to the current timing, I don't think we've expanded our rocket pool staked ETH that much recently, and the primary reason has been with the current upgrade coming and the queue being longer than the solo queue, and we want to move to, was it Saturn 2? For us to get in the queue and then exit the queue and then get back in the queue, it's easier for it, just like the opportunity cost to be waiting in the queue when we know the upgrade is coming is not worth, like the payback period doesn't make sense. We're better off to solo stake and then exit the solo queue and re-enter when with the new upgrade. So that's kind of where we've been in terms of deploying. I think once that goes away and it's then it's just a factor of what are the what's the queue look like to enter and how do we want to allocate. I think we would be we would not be all in like 100% in Rocket Pool. We would want to diversify our staking across multiple platforms just for risk management.
Yeah, and then what about in kind of some of the rocket pool designs here, right? There is, especially with Saturn 1 that's coming up, there's kind of a base increase in yield that you get from just running a rocket pool node and earning the commission. But then there's a lot of work on the redesign of the RPL tokenomics. Does BTCS, do you hold the RPL token and do you plan to stake RPL with your node to earn that additional boosted rewards, or are you just purely an ETH only investment company and you're just staking only the ETH?
We have very little RPL right now. One of the challenges with the RPL is the accounting treatment around it and the being able to kind of evidence the price on a third-party explorer that the auditors are comfortable if I'm getting specific. And so we've typically tried to stay away from smaller tokens. Not that we don't like it, but it just becomes more of a headache than it's worth, if that makes sense. And that's much more on the operational side. So even when I mentioned we were doing due diligence on other liquid staking platforms, we looked at Statter and their token. I mean, the thing was it was near impossible to get to a point where we could do it on an institutional basis. So right now, it's a lot easier for us and a lot less work to not have RPL on our balance sheet. It's not meant to be a signal as to not believing in it. It's just a lot of work, and we try to where possible we try to keep things simple because we get a lot of things going on.
Yeah, I certainly can understand the ideal for simplicity. I guess maybe one of the things, just going back to the conversation about doing the due diligence with Rocket Pool, are there any kind of interesting lessons learned from your point of view, or maybe Langers from your point of view, about some of the unique challenges that institutional stakers have as being a node operator, or different considerations or ways that the protocol needs to service these individuals?
Sorry, if I could just quickly jump in. We do have a POAP available for this call. So for the next 15 minutes, if you have the POAP Home app, that's a bit of a mouthful, you can input a code in the app to mint a free POAP. If you're struggling with that, drop me a DM on X or in Discord, and I do have a small number of manual codes, first come, first served. For the POAP Home app, here's the code. It's BTCS-RP. So BTCS for BTCS-RP for Rocket Pool. Back to you guys.
Sorry, we're all all busy trying to mint our POAP there, but but I think we were saying, and thank you very much, Mav, for that. We'll do another announcement about that code, but definitely claim the the POAP if you can. But I guess the question to it was, are there any unique considerations or lessons learned from kind of institutional stakers on how Rocket Pool can better make available its node operating services to institutional stakers?
Yeah, I think it depends on how you define an institution, right? So a public company is very different than a large private institution because of the reporting requirements. So I mean, we found the documentation very good, and we were able to kind of work through that process. It's always hard to be the first ones to do something, right? The second you do something, everybody can go look at when you're public. Everybody can go look exactly what you did, just go copy it, right? Like someone can go read our SEC filings and see like, oh, that's how we have to just disclose all the accounting literature, and so when you're doing something for the first time, it can be a very time consuming process. And I'll give an example. It's not necessarily tied to Rocket Pool, but when we started block building, we went to the SEC's Office of Chief Accountants and said, we have an accounting question. We think revenue is this and cost of sales is this. And they mulled it over multiple memos. 3 months later, they came back and said, we disagree. And we said, well, you guys are wrong. You don't know what you're doing. And how do we appeal? And they said, well, here's the process to appeal. And it goes all the way to the chief accountant, which is like the number 2 guy at the SEC. And so they said, we're going to appeal. And we, spent another month putting together a whole report, appealed, had multiple phone calls. And crazy. We actually won the appeal. But it took us 9 months to get to where the accounting is, an expensive process to go through, time consuming on management. And now any other company that was to say, hey, any other public company wanted to go into block building, the whole revenue recognition, which is one of the hot points for the SEC, whether they're crypto friendly or not, has been solved for them. And so, as the kind of oldest public crypto company in the world, I think we've pretty much done most everything first. And the downside of that is it's just a lot of work, and it's others get to benefit from it. So in this case, I think it's good. I hope more companies join on Rocket Pool, but it is a time consuming. If you're doing it first, it's time consuming. I don't know. Right now, I don't know. At least for institutions that are public, there's only I think 7 that are U.S. listed public companies. I don't know where they are. I think the big guys are all using larger institutions like Galaxy and Figment and the large players everybody knows to manage the kind of their staking and their deployment. So I don't know unless the third parties they use support or add a Rocket Pool. It may be a little bit of time till we see others. But again, the market is moving very quickly, right? It seems like a new. Every day I look at the news, there seems to be a new, digital asset treasury strategy popping up. So,
Yeah, very interesting. And I wonder, and maybe this is perhaps just my ignorance here. I would kind of view you as an institutional entity, but I guess you're correctly just describing yourself as a publicly traded company, and what an institutional investor would be a large like ETF holder or investment company like Fidelity or BlackRock.
yeah, that's kind of how I think of it as an institution, maybe a private equity fund, a hedge fund, BlackRock, Fidelity. I suppose technically you could view us as an institution. I look at us more as like a public operating company. But
Interesting. And so there's a couple of things you expanded on. I want to get to the block builder in a little bit, but you brought up the ideal of a treasury strategy, right? And certainly, I think the kind of darling stock of the recent years is something like Strategy, formerly known as MicroStrategy, SharpLink Gaming, in terms of its buying and holding ETH and trying to gain gains based upon the price appreciation of either Ether the asset or Bitcoin the asset. But tell me a little bit more about expand upon where you see a treasury strategy growing and where BTCS plays into that. And a follow up to that is what's unique about you, I think, is that you're one of the few that is actually incorporating Ethereum staking into that. Am I incorrect in that, or is that part of that whole treasury strategy?
No, I think all the others are staking as well. They're just, I think they're deploying to third parties to manage that whole process for them. So the typical, digital asset treasury strategy, whether that's Tom Lee's deal or Joe Lubin's, at the moment, I think they may evolve over time, but I think at the moment they're basically buying a bunch of ETH, giving it to a third party, and the third party is staking that for them. And that's kind of the path. I mean, we've been doing this. Really, the digital asset treasury strategy is a byproduct of our operations, right? We didn't pivot from being a biotech company to we're just going to accumulate Ethereum. We've been running validator nodes since 2021. And we've always been kind of a blockchain infrastructure company. And what we liked about Ethereum, and this is kind of going back to Bitcoin mining. If you're a Bitcoin miner, you buy a bunch of computers, they're going to be paperweights in a year or two. It's a depreciating asset, and you get a yield on that, but everything's revenue. If you run an Ethereum validator, all your capital is tied up in a potentially and hopefully, high growth appreciating asset versus a 100% depreciating asset as a computer. And so that's why that was kind of the big reason for the shift 5 years ago. And looking at us now, like if you want exposure to Ethereum, like, obviously if you want to do it on chain, you can go buy Ethereum, you can do a lot of the things we want to do, but that's very technical. If you want exposure to Ethereum in the public markets, if you want a one-to-one, just go buy an ETF. No leverage, no yield. It's Ethereum through your brokerage account with, fees. If you want Ethereum, staked Ethereum, and if you kind of put this in crypto terms, an ETF is like buying Ethereum. If you have a digital asset treasury strategy that is just staking, that's like, buying Ethereum and staking it. And the next phase of that, and that's kind of where we are, is like you get a one-to-one on Ethereum, plus you get the staking yield, plus we're amplifying that, through our efforts with Rocket Pool. We're amplifying that because we're a block builder and generating revenue there. And we're looking at all these other strategies to really build an operating company focused around our infrastructure that is going to drive more ETH, because basically all of our revenue is in Ethereum, and we're kind of hoarding it, as are the others. It's just our focus is really, we're going to be an infrastructure play. And there's a lot of other companies that are putting Ethereum on their balance sheet and doing all sorts of other things, like buying NFTs, or deploying capital in other ways. Our focus has always been, I think, for the last 10 years, blockchain infrastructure. We pivoted from Bitcoin blockchain infrastructure to Ethereum infrastructure 5 years ago, but at heart, that's kind of where we've always been.
Interesting. In the kind of digital asset strategy, where do you see this going for a lot of companies? Do you see that larger, S&P 500 companies will start to incorporate that as part of their investment strategy or their reserves, or do you see them just buying stock in companies like yours and other crypto companies to diversify their assets, or do you see it just being a different financial tool like they diversify into equities and bonds and trying to, maintain their treasuries and their investment strategies?
I think it's hard. I mean, if you look at most companies, they have a goal, right? Like you're a biotech company, you're gonna create the next drug, or you're an airplane parts manufacturer, you're gonna make parts. So if your business is not focused around crypto, and you actually have an operating business, no matter what you're doing, your e-commerce, and there's 6,000 plus public companies. I think adding crypto to your balance sheet, for most board members that are not familiar with crypto, it's kind of a hard kind of ask, right? Like if you don't know what crypto is, now you're going to put this asset on your balance sheet when you're an airplane parts manufacturer or whatever your business is, and it doesn't really fit. And I think what you're tending to see is the companies that are going after these strategies are very small companies, and they really don't have any other plan. And this isn't a bad plan if you don't have a plan, right? So in the long run, will we see companies putting huge amounts of crypto on their balance sheet? Probably not. I could see a lot putting like USDT on their balance sheet because there's a huge, or USDC or a stable coin for that matter, because it makes tremendous sense. I mean, if everybody used a stable coin, built on Ethereum, and you wanted to, a great example is you want to close a $5 billion merger deal, that's an international deal, because let's say you're selling a company in another country and you have to coordinate wires and a closing. You can have people up at 4 a.m. when banks are open in 2 different countries, so you can get through these processes. I don't know if anybody's ever done any big M&A deals, but it is a disastrous process that takes a lot of coordination. If that moved to stable coins and you could simply move hundreds of millions of dollars at 24/7 instantly, there's friction and problems that have been solved. So I could see companies adding stable coins, adding crypto, going big. I could see them viewing it as, let's get some investment return on our treasury, like we would look at a stock or a bond that we would put on our balance sheet. But apart from small companies that really need to shift their business to something that's going to be transformative, which is what you're seeing with all of these, $10 million NASDAQ companies that are, on the verge of getting delisted, that are putting $300 million of crypto into them overnight because it's effectively a cash investment and it doesn't require shareholder approval. I don't, beyond that, I see real corporate treasuries for like big companies, not really necessarily picking it up in the short run, because it's kind of not core to their business, right? Like I couldn't see if someone said, hey, is Amazon going to go start buying boatloads of Bitcoin or Ethereum to put on their balance sheet? Like it doesn't really seem like a great fit.
Interesting. And then maybe this is a revisit back to Jasper's question, which is, so right now, part of your strategy is to get boosted yield on Ethereum staking by operating rocket pool nodes, right? And in addition to earning the kind of um, APY from Ethereum staking, both the consensus and the execution layer, but also to earn the node commission by running rocket pool nodes, right? And earning that additional yield of return there. Have you ever looked, and perhaps this is Jasper's question, of coming in on the rETH side and taking the liquid staking token and using Aave, where you still earn a staking yield by holding the rETH token, but you're able to borrow against it as a collateral asset, perhaps borrow back in ETH and then repeat the process or loop the process a number of times to get a boosted leverage return on it. Have you explored that at all, or were there some challenges to that aspect of both liquid staking holding and node operating?
So one of the things with liquid staking is it doesn't generate revenue, because my understanding is I think Lido is the only one where you actually get additional tokens, right? If you own the Rocket Pool tokens, just the value changes. And so if you just think about how traditional investors view companies, it's typically on their kind of key metrics that companies are valued on, right? Revenue growth, price to revenue, price to EBITDA, enterprise to EBITDA. There's all these traditional equity metrics that investors are going to look at your company and value it on. So if you move into a novel business model where investors do not know how to value your business, you're going to have a really hard time selling your story and getting awareness around your story if they can't understand it. And so one of the things we try to do is, make sure that we're not only just generating yield, but we're generating revenue. And if something increases in value, but you don't get to say book that value and show it on your income statement, and you don't get to recognize it on your balance sheet until there's some event that occurs, that becomes it may be a great thing to do if you're a private company, but as a public company, it doesn't really make sense for us if nobody's going to understand what we do. And that is a major problem right now. nobody understands our business. It is, when you get into the weeds, extremely complex, and we've kind of tried to dumb it down with this, most sophisticated TradFi DeFi flywheel, where you basically have a couple key components, right? We're gonna, access the capital markets with Aave, the ATM, and doing above market converts, which are really hard to get, but we've been able to do that successfully. We're going to take that, we're going to deploy it in staking. We don't even get into really in our, too much in the weeds and how we present the company, apart from calls like this, of what's involved in generating that yield and that revenue, because the average person doesn't understand crypto. And when we start to talk about, RPL token and what's revenue, you just lose people really fast. And so for us, we're one of the smaller players right now. I mean, albeit we've been around forever compared to the new guys, but we don't have, $2 billion worth of Ethereum. We've had a very nice, we've been very fortunate in the last 2 months that we've raised, over $200 million. I mean, right now I think we're, the cash assets per share are in excess of, excluding the debt and the preferred, are in excess of our current stock price. So, that's kind of a bummer, but we're fortunate enough to be at a scale where we're getting noticed, but we're not, huge, right? We're not a multi-billion-dollar company. We're just getting noticed, and if our story is too convoluted, it's going to be a challenge.
I think also, can you guys hear me better now? I've heard my mic have issues before.
Yep. Yeah, loud and clear.
Awesome, great. The story you tell with the wanting to simplify your revenue stream so that people can digest in the market is something that really hits home in Rocket Pool with the upcoming Saturn upgrade, where we had historically this indirect form of revenue capture, but now we're like stripping it back into a much more simplified version so that investors, home stakers, everyone who's involved in the system has a better idea of what's happening. And as to the comment regarding rebasing, non-rebasing, Rocket Pool actually can service both types of tokens. The protocol helped pool together, which is a popular lottery, like pseudo lottery, like everyone wins, no one loses type thing, or you can only win, you can't really lose money. And so there is a rebasing version of rETH, but when I look at how BTCS is operating, especially in the most novel way, which is your Aave plays, I think it's notable that Aave only takes non-rebasing. So like the Aave ETH that you guys borrow against is a non-rebasing token, and Aave actually only takes non-rebasing tokens. So I just wanted to throw out that Rocket Pool can service both rebasing, non-rebasing Aave loans. And yeah, I was curious, how does that land on you?
Yeah, no, I mean, that's something to explore, because we've looked at, how do we generate revenue for our collateral on Aave? So right now, it's rebasing, right? Is that correct? If I got it backwards. So we don't generate.
rETH is non-rebasing.
So
Rebasing is when you have a increasing supply every day. That would be stETH. And we can do non-rebasing. Yeah, rebasing.
Once you wrap it on Aave, you don't get the benefit. You no longer get revenue. So we'll book, if we have 100 million on Aave, we're going to earn, let's say 2%. But that 2% is not revenue. That 2% is going to be like other income down below the line, which is confusing to investors as to why is that down there as some other thing, because it's interest on collateral. If we have, if we get additional tokens as opposed to that is for staking, right? Which I guess would be a rebasing, like or non-rebasing, then we're going to get additional revenue. And so that's something we've looked at, like what are providers where we could do something like that, so we get revenue on the full amount versus other income, in addition to what we borrowed. And we've kind of looked at that, like how do we do that? It gets when you start to get in the weeds, it gets pretty complex. But for us, that would be, and it's really just storytelling, right? If we have to explain why we have 2 million of other income down at the bottom of an income statement to an investor that's used to reading an income statement, balance sheet, and cash flow, and looking for certain things to fall in certain places to understand how to value a company, and nothing fits in the buckets it's supposed to be because it's crypto. And we've wrapped it in a public vehicle and tried to apply U.S. GAAP, which is generally accepted accounting principles, to these novel new systems. They don't get it, right? And that's how do you package that? And we struggled with that a couple of years ago before the accounting rules changed. You used to have to keep crypto at the lowest price it's ever been. So if you bought Ethereum and it went up tenfold, you didn't get to market at tenfold. But if it dropped, even in a flash crash, below your purchase price, you would market to that purchase price, take a hit on income, and leave it at that low level. And even if it went back up, you'd never mark it back up, but you would always just continually knock it down to the lowest value. And that's something we struggled with for years. We tell people like, well, we have 10 million of Ethereum. And they'd be like, well, your balance sheet shows 2. We'll be like, well, yeah, but it's the lowest price it's ever been. They're like, wow, that's crazy. We don't believe you, right? I mean, now you get marked to market. But I mean, it was a kind of a tangent story of we need to, what's the illustration? Yes, keep it simple, stupid. If in our business is super complex, but we try to build it in a way that we can maximize yield, minimize risk, and present it in a digestible way to the average shareholder that is looking for exposure to Ethereum.
Yeah, absolutely fascinating to kind of hear the reasoning and the challenges that are in here. And it's something I don't think I fully appreciated the pros and cons of a rebasing token or a non-rebasing token and the challenges that it presents and trying to show it, using gap principles on your sheet for valuation of your share price. Very interesting. Um, Maybe we could talk a little bit. You made mention to some explorations you've done in block building. Um, have you guys looked at running custom builders or running your own relay for block building?
I think we have a relay on Rocket Pool and we run our own builders. And Ben, this is where you feel free to jump in. This is definitely your domain.
Yeah. So yeah, we do have our own relay. We only use it for our solo validators and our Rocket Pool validators, but it actually was recently just added to SmartNode, I believe. I hope I'm saying this correctly. I wasn't following along too closely with it, but it is a fork of the Helix relay. The purpose of it is mainly to uh, leverage the block space we're getting from Rocket Pool for our block builder operations, but we do run our own block builder. It's a custom builder written in rETH, so it's been pretty fun working on that project with the team. Our builder on BSC is also custom, I guess you could say. That's in their Go Ethereum client.
Yeah, interesting. What were some of the reasons to explore? I've always kind of understood block building to be maybe a complex endeavor, and you had to be maybe good at it to be very competitive in there. But what were some of the reasons that made it economical or worth pursuing to build your own relay and block builder? And is that something that you open up to others to participate in? Like, for instance, myself, that also a node operator with Rocket Pool. Can I subscribe to your relay and also receive built blocks from that, like I do other public relays?
Yeah, for sure. So you can connect to our relay. I'll have to get the link somewhere. Our landing page doesn't match to the actual like validator, like the MEV boost URL. So I can post a link in the Discord afterwards for everyone who wants to connect to it. But it's also on SmartNode, so you can select the BTCS relay from that. Some of the justifications for getting into block building kind of goes back to what Charles mentioned and what I've been saying about SBET and BTCS for a while now is we're very like devoted to improving the Ethereum ecosystem. We're very invested in providing to the decentralization of the network. So obviously, block building is a very centralized area. Hopefully, with Fossil and EPBS and some of the new changes coming in the next hard fork, potentially everyone should voice your opinions on those. They're asking for a lot of feedback right now from the community, but hopefully those can shake things up. And we've been getting into the space. We've been block building for over a year now. I joined to really scale up the block building operations. We've been doing pretty well since then. I think we've crossed 15,000 blocks produced on chain. We also were the first block builder to work with ETH gas, the first external block builder to work with PrimeEv. So we're very invested in integrating quickly with pre-comp solutions, working with teams on the kind of like the bleeding edge of Ethereum feature set.
Yeah. Oh, boy, you just said something that's near and dear to my heart. Everyone in Rocket Pool is probably rolling their eyes, but I too have been following the pre-confirmation markets quite a bit. You mentioned ETH gas in there. Um, what has been your initial experience of that? Are you finding that you are able to generate a higher earning block by participating in pre-confirmations?
I think a lot of it's pretty early right now. Once I think the Gattaca gateway comes live, we'll see more use of pre-comps and some of the guarantees you can get from either inclusion or execution. We're also working on some exciting things we can't announce yet for execution guarantees for traders. We've been targeting a lot of centralized, decentralized exchange traders and searchers this quarter. We should actually have a pretty exciting product for a couple of them. So hopefully we can announce that later on this quarter. But those things are very cutting edge, trying to be as fast as possible with guarantees of execution. And it's very closely aligned with some of the execution pre-confirmation research being done.
Yeah, yeah. No, this is an emerging space, and so maybe we can talk a little bit about potentially things here coming in the future. I recognize the call's been going pretty good for almost an hour here, but looking ahead here, it seemed like there were a couple of things. I saw a recent posting here about a large capital raise that you've done, perhaps as high as $2 billion. Can you talk a little bit more about that or share what that means?
Yeah, I'll touch on that one because I think people see these numbers in SEC filings, and um, it doesn't mean we haven't raised $2 billion. So what we did is we filed a shelf registration statement, and think of a shelf as like um, if you want to sell stock, you can kind of stick it on the shelf and pull it off when you want to use it. If you don't have a shelf, it means if you want to sell stock, you've got to go, um, you know, through an SEC registration process, which it used to take a year and a half when they would abuse you. Now you're maybe, if it's the first time you're doing it, a month or 2 months or three, that's kind of normal. Or if you've just been through it, maybe a week or so. But if you have one of these shelves available, it means you are ready and you're prepared. So if all of a sudden the market is very hot and you're in a position where you're in a position that you can sell and you're not, shuffling to get ready, right? Imagine it's like you're a surfer and you're just sitting there on your board waiting for the big wave. And it's like if you're a surfer sitting on the beach and the big wave comes and you don't get to surf it because you were sitting on the beach and you weren't out in the water ready. So we just because we have a $2 billion shelf doesn't mean we're going to use it. We may use a little bit of it. We may use all of it. It really depends on valuation. So I think a lot of investors tend to get that wrong, and it's good for 3 years. We have 3 years to use it. If we don't use it, then we have to file a new one. This one we got through the SEC in a week. So it just gives us optionality. And by way of background, we had, I think in 2021, we had a shelf for $100 million and we only sold $17 million off our $17 or $18 million off our ATM. We put up a $250 million shelf, which took us a year to get through the SEC, and that went effective at the beginning of this year. And we've only sold, I think it's about, I'm doing this off the top of my head, maybe it's 145 million off that. And we've got 105 million left. So we have that plus the 2 billion. But again, it doesn't mean we'll use it. It just means it's there if we want it. There's there's obviously no obligation to use it. And if it's not the right time, we're not gonna blow up the company and dilute our shareholders to raise money at a bad valuation. But it's nice to have. It's a good thing to have.
Yeah, yeah, yeah. Um, and also kind of looking forward ahead here, you mentioned a little bit about the work that you're doing with your builders, your searchers, you're running a relay, you're looking at execution commitments and inclusion and commitments and your pre-confirmations. Um, where do you see that kind of going? I mean, what can you share with us now that might be kind of a prelude to where you're thinking of investing?
Ben, I think that you should take that one because that one's definitely more on the technical side.
Yeah, it's a good question. This is a good time for me to remind everyone there is a Twitter space tomorrow that I'll be speaking in with a bunch of the pre-conf providers. We'll have ETH Gas, Primev, we'll have Kubi from Gattaca there, and we'll have Amir from Puffer, and we'll just talk about all of the different updates that are happening in the pre-conf space. It seems like in the last 7 months, a lot of companies have pivoted or kind of redefined what they want to work on. So that would be a great space to catch up on what's the current state of pre-comps and where things are going. In terms of where we see it going, we do see value in a marketplace like ETH Gas. We see value in providing execution guarantees. Obviously, with rollups are very excited about some of the inclusion pre-confirmations. It seems like a lot of teams are waiting for the next Fusaka hard fork for a lot of things. Actually, I don't even know if Fusaka is the right term for this one. There's so many fork discussions going on, but there's a lot of teams waiting for that. I know Tycho, I think, is waiting for guaranteed to look ahead, and so we'll see how that evolves. But I do know there are some pretty exciting things coming soon in terms of pre-comps.
Okay. And then maybe the last question about the kind of forward-looking stuff here is that you made mention to the next release out of Rocket Pool, and maybe this is a good question to bring Langers back into the conversation, which is what are your plans for the next Saturn release, which I believe I'm tracking it right, is Saturn 1, the big release is the inclusion of megapools, the reduction of the amount of node operator ETH. So instead of requiring 8 ETH, it only requires 4 ETH. What are some of your thoughts about that, and what's your strategy there? Are you planning to increase the number of validators you operate with the release of Saturn 1?
Yeah, so you nailed it. We've been as I said earlier, we've been kind of holding off ramping up on Rocket Pool because of the upcoming release, because the timeline to get in the queue and get out of the queue to then get back in the queue just puts our capital is unproductive for too long. So it makes sense for us to wait for that queue because we can get in and out of solo nodes much faster, right? The wait period's substantially shorter. So we're excited for that upgrade, and we plan to expand when that launches. And I guess the bigger question is when is it launching? I don't know off the top of my head, or I don't know how firm the date is, but I know it's supposed to be sometime in Q4 is my understanding.
That's a great question. So it's actually targeted for October 29th. So
Okay, great.
That's what we're targeting. So we're under audits at the moment. So we've got 3 audits in play at the moment. So once we get through those, we can basically go live. But those audits are quite long. So as you can understand.
Yep. Well, I'm marking my calendar now, by the way. So
excellent.
And Langers, I know the audits have just recently started, but everything, and you've published an excellent timeline, kind of bringing us right up to that date. But any update? Are we still on track? Everything looking green across the board?
Yeah. So Sigma Prime are wrapping up their audits. The first audit is kind of wrapping up. Cantina, Spirit Cantina have started theirs last week. And Balsec starts theirs this week. So they're all kind of like kicking off. Everything seems to be going really well at the moment. So we'll definitely keep everyone across what's going on. Obviously, it depends on what comes out of the audits and what they find, but things are going well so far. So we're pretty good. We're in a good spot.
And Charles and Ben, anything that we haven't covered yet on today's topics regarding BTCS and anything that's important for the Rocket Pool community to know?
I mean, I guess I would just add, it's exciting to be a part of the community. Um, we're pretty excited, as a team to be building and furthering Ethereum and decentralized applications. So yeah, I mean that's really it.
Yeah, agreed. We're really passionate about Rocket Pool. I've been a vocal supporter of Rocket Pool for a while. Personally, I do hold rETH, so I hope that gives us good graces. But with the Rocket Pool community, but yeah, we're excited. One thing I did want to mention about it really quick. I know it's been asked before. It is exclusive to our builder, but our builder gives full MEV rewards, full block value to the Rocket Pool smoothing pool. So all those earnings are shared with the community.
Oh, excellent,
I
excellent.
want to thank you guys for being like one of the best examples of the DeFi mullet, where you have a TradFi, public markets facing front end, but you're really taking advantage of the on-chain markets to create your edge, and there is like a legitimate edge there. I mean, we talked about the arbitrage between Aave rates and the traditional markets, so you guys are really pioneers in the space, and I'm glad you guys realize the potential that Rocket Pool has for traditional companies, on-chain companies, people at home, to really create a product that is uh, rational and good for all, especially Ethereum.
Yeah, well, thank you.
Yeah, and Ben and Charles, if folks listening to this call want to find more about BTCS, how can they get a hold of you or learn a little bit more about the company and be able to do their due diligence and an investment perspectives with your company?
Yeah, so I think that there's a couple ways. The easiest is, go to www.btcs.com. Obviously, if you like a dry read and you want the most information, just look us up at sec.gov. And we recognize that most people do not like to get their information from, SEC filings. It's a a hard read, and so we're trying to be much more proactive on X. So you can follow myself at Charles_BTCS, or alternatively at Nasdaq BTCS, no underscore as well. So those are kind of the two avenues. We tend to put more of the company updates on the company page, and I'll tend to get into a little bit more detail and commentary on my X account, just to give people perspective.
Perfect. And Langers, for the folks that are in the more TradFi world that are listening to this, how can they find more about Rocket Pool?
Yeah, so on X, it's rocket_pool. And we have the website rocketpool.net. And yeah, I would actually, our Discord is actually off of. So if you go to our website, you can kind of scroll down to the bottom, and there's a link to our Discord. That's where all the community hang out, and it's a great place to be. So yeah, I'd highly recommend that. But definitely, rocketpool.net is probably the best place to go to.
Well, I'd like to thank all three of you for being on today's call, and I certainly have learned quite a bit about public companies and kind of their engagement in blockchain infrastructure. And so I've learned quite a bit about it, and I thank you all very much for today's call.
Cheers.
Thanks for having on, everyone.
Thank you.
Thank you, everybody.